You've been told there are growth stocks and value stocks. Maybe you've heard of dividend payers and the safe bet of a blue chip. But I'm here to tell you to forget all that BS because I'm going to give you the main 7 types of stocks, as well as actionable advice for each archetype and how to invest in them based on my research and analysis. Disclaimer: this is not investment advice, but an intro to stocks and strategic guidance. We're going beyond the textbook definitions to reveal the 7 fundamental stock archetypes, the strategic characters that define the economic landscape. Archetype 1, the Titans. The Titans are the bedrock. Think of companies like Coca-Cola, Johnson & Johnson, or Apple. They are the established 100-year-old corporations with fortress-like balance sheets and near-ubiquitous products. Their economic role is that they provide stability, essential goods, and services that people purchase regardless of the economic cycle. They are the constants that prevent the economy from buckling under pressure. In terms of portfolio roles, the Titans offer lower volatility, consistent returns, and a reliable foundation for long-term wealth preservation. They are your anchor during a storm. Here's my strategic play. If you're within 10 years of retirement or trying to preserve capital, anchor your portfolio with Titans. Prioritize those with high free cash flow and a history of surviving multiple recessions. Quick pause before we continue. Let me tell you about the origin of the finance word blue chip. The term blue chip itself doesn't come from finance, it comes from poker. In most traditional poker games, the blue chips are the highest valued tokens on the table. In the late 1920s, Oliver Gingold, an editor at the Wall Street Journal, first used the phrase to describe stocks trading at 200 or more per share. It immediately became the shorthand for the highest quality, most valuable names in the market. A name born not in an office, but around a card table. Archetype 2, the Explorers. The Explorers are the engine of change. Companies like Tesla or early-day Amazon, they reinvest nearly all their earnings back into the business to fund rapid expansion. They aren't paying dividends because they have a higher calling: innovation. Their economic role is to innovate, disrupt old industries, and push the very boundaries of what's possible, creating entirely new markets where none existed before. In terms of portfolios, they act as accelerators due to their high-growth engine of capital appreciation. They offer the potential for 10 times or even 100 times returns, but they carry more risk. Their future is priced in today. My strategic play: when hunting explorers, ignore short-term earnings. Focus exclusively on market share gains, revenue growth acceleration, and the size of the total addressable market. You should simply be betting on the company's future dominance. Archetype 3, the Landlords. The Landlords are a unique breed. These are often real estate investment trusts, or companies with mature, cash-rich business models that have run out of growth avenues to explore. Think of utility companies or retail giants that dominate their niche. They act as cash generators to the economy. Basically, they convert tangible assets like buildings, fiber optic lines, or established infrastructure into consistent, predictable cash flow. In terms of portfolio, they are the source of passive income, designed to be held for the cash payments they send to your account, often serving as a critical inflation hedge. My strategic play? Look for landlords with high occupancy rates and long-term contracts in resilient sectors like data centers or industrial logistics. Use them to create a compounding dividend reinvestment loop. To understand the landlord, look at the REIT structure in the U.S. By law, a REIT must distribute at least 90% of its taxable income to shareholders annually. This is not generosity. It is a mandate established by Congress to make large-scale, income-producing real estate accessible to the everyday investor. When you buy a REIT, you are not buying a promise of growth. You are buying a direct, legally guaranteed claim on the rental income from a portfolio of properties, from data centers to shopping malls. This mechanism is the very definition of the landlord archetype's economic role. Archetype 4, the Engineers. So, the engineers are the physical builders and maintainers of civilization. Companies that make the specialized components, the heavy machinery, and the power grid that literally keep the lights on. They build and sustain the physical infrastructure of the economy, the railroads, the power plants, the chip fabs. Without them, the market stops. They are cyclical and defensive. They perform well when the economy is in an expansion phase as construction ramps up, but their utility components offer a steady defense when growth slows. My strategic play? Invest in engineers early in an economic expansion, specifically those holding monopolistic control over critical infrastructure. The wires, the pipelines, the toll roads. I say that because these are essential regulated businesses. Archetype 5, the Diplomats. The Diplomats are companies listed on U.S. exchanges, but operating and generating the majority of their revenue abroad, or foreign companies listed locally. They are the essential link between the domestic economy and the other 95% of the world's consumers. In the economy, they facilitate global trade, export local ideas and products, and connect economies, allowing capital to flow efficiently across borders. They provide diversification against the performance of a single market and offer exposure to growth in emerging economies that may be accelerating faster than your home country. My strategic play? Use Diplomats to specifically target demographic booms, such as the rising middle class in specific Asian or Latin American markets, by choosing multinationals that dominate those local consumer trends. Archetype 6, the Rebels. The Rebels are the smallest, newest, and most volatile players. These are the micro-cap biotech firms or the newly public tech startups that are still burning cash to capture market share. Their core function is to challenge incumbents, create entirely disruptive technologies, and take risks the titans would never consider. They are the future's research lab. Their portfolios are high risk, high reward. The vast majority will fail, but the few that succeed can pay for all the losses. They are the speculative portion of a highly aggressive portfolio. My strategic play? Limit your rebel allocation to a small, non-material portion of your portfolio, 1% to 5% at most. Do not average down on losers. Set clear exit criteria and treat this money as entirely speculative capital. Archetype 7, the bankers. Banks, insurance companies, asset managers. They are the invisible hand that lubricates the entire machine. They don't make products. They manage the flow of money itself. They provide the capital, the credit, and the risk management necessary for the other 6 archetypes to function, grow, and execute mergers. They are a direct way to bet on the health of the overall economy. When the economy is growing, more loans are made, more deals are done, and the bankers thrive. My strategic play? Bankers are directly exposed to interest rates. Buy when the interest rate cycle is turning from high to low, as this expands their net interest margin and increases lending volume. Now that we've talked about the archetype summary, let's talk about the danger. The danger is that a successful archetype will attempt to defy its nature. I call this the archetype crisis. Consider a massive explorer, a trillion-dollar technology company. After years of 30% growth, it begins to mature. Its growth slows to 10% or 15%. Management now faces a strategic conflict. Does it continue to chase the last vestiges of high growth, the explorer role, by making risky, expensive acquisitions? Or does it embrace its new reality and transition to become a titan, focusing on margin expansion and returning capital to shareholders? When an explorer stock acts like a titan, paying a meaningless small dividend just to appease investors, it confuses the market. When a titan acts like an explorer, trying to chase a volatile, faddish new market, it destroys its stability. The companies that thrive for decades are those that understand their core archetype and lean into its specific role. The companies that fail are those that suffer an identity crisis and try to be all things to all people. Your job as the strategist is to correctly identify the archetype before you invest, not after. Visualize the market not as a battlefield, but as an intricate, sprawling clockwork machine. The titans are the massive, slow-turning gears. They provide the consistent torque and movement. The explorers are the fine-tuned, high-speed flywheels. They provide the exponential energy for future motion. The engineers are the steel structure holding the assembly together. The landlords are the energy source, pumping out steady dividends as the machine operates. The bankers are the oil, ensuring every part moves smoothly through the provision of capital. The diplomats are the linkages connecting this clockwork to other foreign machines. And the rebels are the experimental prototypes being tested on the side, one of which may become the next massive gear. It is only through the dynamic tension and collaboration of these 7 archetypes that the market achieves stability, sustains innovation, and ultimately drives the economy forward. So basically, you need to stop thinking about stocks as single tickers. Start seeing them as strategic roles in your financial story. When you build your portfolio, you are not just picking companies, you are assembling your all-star team. This is the toolkit for applying the archetypes. 1. Define your mission. Are you a 25-year-old explorer optimizing for 10 times growth, or a 55-year-old titan prioritizing capital preservation and income? Your portfolio should reflect your own life archetype. 2. Assemble the core. Every strategic portfolio needs a titan's foundation, your 40% to 60% allocation for stability and resilience. The growth engine. Allocate 10% to 30% to the explorers. But remember to treat that money as capital that could be wiped out. This is your asymmetric bet on the future. 3. The income layer. Use the landlords and potentially some high-yield titans and bankers to create a mandatory cash flow layer, critical in retirement, valuable in your 30s for reinvestment. 4. The diversifiers. Strategic use of the diplomats and the engineers shields your portfolio from localized economic shocks. They are the insurance policy against the home market turning against you. 5. The speculation budget. Keep a small, non-material 1% to 5% allocation for the rebels. This is your fun money and allows you to participate in market excitement without jeopardizing your financial foundation. A truly successful investor is not someone who finds the best stock, but someone who understands the purpose of every stock and assigns it a clear, strategic role in the architecture of their wealth. The market is not random. It is a system of roles. Choose your players wisely.